Really quick, I need your help because the FinVid YouTube channel has been wrongfully demonetized by YouTube. YouTube has incorrectly claimed that FinVid violates YouTube's reuse content policy. That is incorrect. FinVid provides unique commentary, market insights, and my own personal opinions as someone who has been actively trading in financial markets for years. FinVid's use of clips is considered fair use under copyright law. But I need your help because this channel has been wrongfully demonetized by YouTube. I have appealed the decision by YouTube, but I have been told that I will have to wait up to 14 days for a response from YouTube. I really need your help here. I have no way of getting in contact with YouTube. If you can please post on X at YouTube or at YouTube creators so that they will hopefully expedite the review process. Thank you for your help and thank you for watching FinVid. Now let's get to the video.
You got the NVIDIA story, you got the Apple story. Is there any tech you like right now?
Andrew, it feels like nothing can really go right for big tech right now. It's all going against them all year. That's been the case. But in terms of big tech, what we like at Intelligent Alpha, where we do use AI to do our portfolio creation, NVIDIA is still our top AI pick. And I know that that is probably at this point exhausting to hear. The stock has not worked this year. It really hasn't worked the last 6 months. But I think if you look at the bottom line, 21 times forward earnings, I think those earnings are pretty solid. We've de-risked the China issue now with the H20 ban. And I don't think that the hyperscalers, no matter what happens in the economy, are going to stop spending on NVIDIA chips. So that is still the name that our models are sticking with.
And you still think that NVIDIA, I mean, one of the things, though, that we've been talking about for months now, by the way, including Andy Jassy, who was on the broadcast just last week, talking about how ultimately the price of these chips has to come down. Like, this whole thing doesn't really work unless the price comes down. And who would eat that price? NVIDIA more than anybody else.
I think you'll see over time, and this happens always in tech, right? Prices come down and the ability of whether it's software or hardware improves over time. That's the story of technology. But I think the other side of the AI bull market is really what is the consumer side? What is the enterprise side for demand for these products? And what we're seeing over the last 3 months, and I don't think this is being reflected in stocks at all, is that there is huge demand for these products. And I think it's increasing and even accelerating with the O3 model launched last week from OpenAI. You have Grok from xAI. You have Gemini's new model from Google. All three of them have said they have capacity constraints in terms of what they can serve to customers right now. I think the demand will be there to force more chip buying, even if prices do come down.
Coca-Cola's fine, but a lot of other things may not be, including NVIDIA, which once again is under some pressure here, although it feels as though we knew about a Huawei chip that was competitor to the H20.
Right.
There is some reporting, I believe, from Reuters saying it's a new chip, although I absolutely remember the research from Thursday morning referencing. Remember, I read all those definitions of it. So Jim perhaps knew the idea that Huawei is making great inroads in terms of coming up with various technologies that compete at least at a certain level with NVIDIA. Obviously, the lower level, the H20 not being what the H200 is, not being anywhere near what some of the Blackwell chips are.
Look, I put out a piece last Monday saying, listen, you got to sell NVIDIA.
I know.
You got to sell something.
I don't think we've paid enough for that, by the way.
And then I reiterated on Wednesday, look, I can't sell it because of the stupid rules I have, but you got to sell it.
This is a man, I mean, this is NVIDIA we're talking about.
The stock dropped huge.
NVIDIA.
I mean, look at the lower highs and lower lows.
The stock dropped huge last week, and I said, look, I can't sell it until Monday, but please do it.
Wow.
And it got crushed. And I walked in this morning and said, well, this is just typical. Like, I couldn't sell it. And Jeff Mark said to me, no, it's not for you, Jim. It was for the club members. You got the club members that much higher. We sold it twice. We sold it once at the top. We sold it last week. Well, we didn't sell it. The club did. But it is just hideous.
Man, that's the end of a beautiful friendship, you and NVIDIA.
My friendship is me and the viewers and the readers.
Multiple news stories sent NVIDIA stock lower today. The first of those news stories was a report from Reuters saying that Huawei is preparing mass shipments of its 910C AI chip with shipments starting as soon as next month. With the U.S. restricting sales of NVIDIA's H20 to China, Chinese companies are turning to Huawei as an alternative, causing market participants to fear that NVIDIA may effectively be locked out of the Chinese market for good. As pointed out by analyst Dylan Patel of Semi-Analysis, Huawei is not far behind having a chip comparable to NVIDIA's H20. Additionally, Huawei has an answer to NVIDIA's Blackwell with their cloud Matrix 384. While NVIDIA's Blackwell consists of racks of 72 GPUs each, Huawei's cloud Matrix consists of 384 GPUs, more than 5 times that of Blackwell. Semi-Analysis says the trade-off is simple. Having 5 times the number of chips as NVIDIA's Blackwell more than makes up for each GPU being only 1/3 the performance of an NVIDIA Blackwell GPU. One downside of the cloud Matrix is that it consumes nearly 4 times the amount of power consumed by NVIDIA's Blackwell. But here's the thing. China is not power constrained like the US. China has added an entire US grid worth of power just since 2011. This begs the question, could US restrictions of H20 sales to China have the opposite effect of what the US intends? That remains to be seen. Let's get back to the clips, and I'll provide more context as we go.
Back to NVIDIA. Why not want to own it here?
Okay, so the reason why you would not want to own NVIDIA is because the drumbeat out of Washington makes it so NVIDIA is just too hard. Because you don't know whether the next thing Washington says is, look, we're now going to limit exactly as the Biden administration did. We're going to agree only 18 countries are friendly countries, or maybe we cut it back to 10 countries. So the news flow out of the White House is so horrible about NVIDIA that you think on the one hand that there's a deal on Friday, then you wake up on Monday and you're just bushwhacked. And I think that that's the real problem. It's not Jensen. His stuff is fantastic. It's not them. And by the way, I do not buy for 1 minute the idea that that Microsoft has hurt the data center, because I think that OpenAI has taken almost everything they have, and they're sold out. NVIDIA is sold out. It's the president and his people, and they just don't like giving the Chinese the latest and greatest.
Right.
And they're afraid the Chinese will get it another way if they don't get it directly.
And then we're also seeing fresh concerns about capital expenditure cuts in the tech industry. And what I mean by that is Wells Fargo just raised a red flag over the weekend about Amazon pausing some of its data center leases. This comes despite Amazon CEO stating earlier this month that the company wasn't planning on pulling back data center construction. Amazon has not responded to CNBC just yet. But this potential slowdown really follows Microsoft's announcement just last week that they're tapping the brakes on their data center expansions. So the real impact here, and why I bring it up, is because that means less spending on chips and hardware across the board. And it's telling right now that Skyworks and Microchip are really the only two positive names performers today out of the 27 companies in the SMH Semiconductor Index, which you're seeing on your screen, is down nearly 4% itself today. NVIDIA, the third most actively traded stock on the NASDAQ, though volume still remains below its 30-day average. The stock really falling, you mentioned it, Kelly, down 6% after Reuters reported that Chinese tech giant Huawei is preparing to ship advanced AI chips as early as next month in China. So this comes after President Trump's new export restrictions effectively locked NVIDIA out of selling its chips to China. That would be the H20s, and ironically helping China's homegrown chip market. So that's what's weighing on the stock today.
In addition to news about Huawei, Wells Fargo and TD Cowen both reported that Amazon has paused a portion of its data center leasing. This is odd given that Amazon CEO Andy Jassy recently spoke with CNBC, saying that he expected Amazon to continue spending big on AI capex. I don't know if the report is true or not, but I do wonder if the tariff situation has caused Amazon to reconsider some of its capex plans, given that Amazon's e-commerce business is heavily exposed to tariffs. As for Microsoft, the company told us on their last earnings call that they expected to shift their capex spending away from external costs like land construction and utilities, and shift that spend more towards short-lived assets inside of the data centers, such as CPUs and GPUs. This is because Microsoft had to spend a lot of money on physical infrastructure over the past few years, since they were desperately behind on that front. And now, as construction projects are completed, Microsoft will focus its capex, spending more toward the internal assets of the data centers. Let's get back to the clips, and I'll provide some important information later in the video.
Adam, I'll give you the last word on that. NVIDIA's down a bunch, some of the other chips. You have the Huawei news today as it relates to their own chips and China, what that means in the bigger picture. How do you see it from here?
I think if the market goes up, very, very short semis will work. So if people want to take risk and they want offensive side of the barbell, they should just buy semiconductors. The stocks are down a ton, and the long-term, Malcolm's comment resonates. The long-term view of compute and what that means is pretty good, AI, et cetera. And so if you think the market's going to rally, if you think there's a tweet coming, or if you're just really defensively positioned and you feel like you've been right here recently, then I think you buy semis. I think that'll get you the offense you need. Tech has worked 19 of the last 20 times in the 3-month period after a market was down 10%. On average, it was the best performing sector. And then within tech, semis will participate. So, Malcolm likes software, I like semis, whatever. But I think tech will work, and I think semis will work if you want offense.
We begin with you and this nasty day for NVIDIA and some of these other chip stocks.
Yeah, the recent drop in NVIDIA stock price can actually be traced down to three key factors. You've got growing concerns about the tech industry's capital expenditure cuts. You've got rising Chinese competition, and then lingering fears of additional export restrictions, which are supposed to be scheduled for May 15th. That would be the AI diffusion rule. So that's weighing on tech as a whole. But Wells Fargo, you talked about it earlier in your show, they put out a note raising concerns or a concerning signal about Amazon pausing some of its data center leases, or more specifically AWS. This potential slowdown comes right after Microsoft announced last week they're slowing down their data center expansion plans and could mean reduced spending on chips and hardware across the tech sector. So that's weighing on it. Secondly, NVIDIA is also feeling the pressure after Reuters reported Chinese tech giant Huawei is preparing to ship advanced AI chips as early as next month. This development follows President Trump's new export restrictions that effectively blocked NVIDIA from selling its H20 chips directly to China, creating this ironic situation, Scott, where these restrictions may actually be boosting China's domestic chip industry.
Hey, Morgan. So first it was Microsoft pouring some cold water on the CapEx story. Now it is Amazon. Two sell-side notes this morning. They say AWS has paused some of its data center leasing discussions. If accurate, that could signal a cool down in what has been one of the hottest and most resilient themes in tech amid all of the recent volatility, and that is AI infrastructure spending. Now, Andy Jassy, he did reiterate Amazon's CapEx plans for 2025, but if the company is slowing out its build in the near term, that could raise questions about demand and really whether enterprise adoption is keeping pace with all the hype. Now, this would also echo positioning from Microsoft that it may be digesting leasing deals. And if two of the three hyperscalers are pulling back, that could further shake confidence across the entire AI trade. And certainly we saw that play out in today's session. You had stocks in the AI-powered data centers, semi-trades getting hit hard, not to mention the Magnificent Seven getting pinched by Trump's politics at home on one side, and on the other side, China's increasing competitiveness abroad. Now, this all raises the stakes for Google's earnings on Thursday, guys, as the only hyperscaler now that hasn't really walked back or any rumors of walking back CapEx plans. Investors are going to be watching for any kind of color commentary around that.
So, for context, though, all of the hyperscalers are full steam ahead on an overall AI strategy. This is just a near-term question of, over the next couple of quarters, are we able to forecast anything about overall demand based on the little twitches that we might be seeing in their spending?
I'm glad you asked, because demand is a totally different story. You hear from not just the hyperscalers, but the big AI players, OpenAI as well, xAI from Elon Musk. They say that demand is red hot, and that's why it's been sort of difficult for the market to digest the supply side. The idea that CapEx plans to supply the compute for more AI needed is scaled back. But again, we keep hearing sort of these noises, first from Microsoft, then from Amazon. It does sort of raise questions about that demand. They're going to say that it's hot because they want to be seen as full speed ahead on AI and that they're distributing it and that they're big players and seeing a lot of demand. But the supply side questions do sort of raise some doubts, I think. And you know what some say, John, you hear it as much as I do. There's no killer AI app right now. So is that demand going to keep up? And then there's all these questions around DeepSeek, right? It becoming cheaper. Yes, that's going to lead to more, but do we need all the data centers that have been planned out?
Okay. Since DeepSeek is being mentioned again, I want to remind you that there are multiple phases to the development of AI models, and this is important when we're talking about DeepSeek. First, there's training, then post-training, and then inference. And while developers in China, including those at DeepSeek, have discovered cheaper ways of training AI models, that is just one phase of the process. Once we get to post-training and inference, the amount of compute necessary is many magnitudes greater than what's needed for training. And more compute ultimately means more hardware from NVIDIA. It also bothers me whenever I hear analysts or the financial press talk about how there isn't a killer AI app, while simultaneously saying that we're seeing record levels of demand for AI apps. It's as if they're contradicting themselves on this point without even realizing it. The reality is that we have seen very strong consumer demand for AI from companies like OpenAI, xAI, and Google just recently. And I think that may be the bigger story here. Yes, there are many short-term concerns and headwinds due to the tariff and macroeconomic situations. But if we zoom out for a second, consumer demand for AI appears to be growing. and therefore the demand for more compute should be growing as well. Now, as for NVIDIA specifically, I was very optimistic about NVIDIA's May earnings report until we got news of the H20 restriction and news that NVIDIA would take up to $5.5 billion in charges for the quarter as a result of the restriction. For context, NVIDIA guided Q1 revenue at $43 billion. A charge of $5.5 billion is nearly 13% of that amount. And so now I'm not optimistic about NVIDIA's May earnings report because I would be shocked if they were still able to deliver on guidance for the quarter. At the same time, while I'm no longer optimistic about this specific earnings report, I think NVIDIA will be fine over the long term. Demand is still very strong, as I mentioned. NVIDIA still has a strong competitive moat across both hardware and software as they've taken a total system approach. And companies that upgrade from Hopper to Blackwell equipped with Dynamo will still experience a 40x in AI factory revenue. And so I think the underlying thesis remains intact despite the short-term headwinds and negative news flow. Looking ahead, we have hyperscaler earnings starting this week. Alphabet reports earnings this Thursday, the 24th. Then we have both Microsoft and Meta reporting on April 30th, and then Amazon reports earnings on May 1st. This earnings season is way more important than usual given the recent tariff and macroeconomic situations. Market participants will be watching these companies' CapEx guidance very closely. Be prepared because we could easily see NVIDIA trade sharply higher or sharply lower, depending on any of these companies' CapEx guidance and their outlooks for 2026. If these companies maintain or even increase their CapEx guidance, then I think we could see NVIDIA trade higher on the news, as that would help calm some investors' fears. But we will have to see what happens. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.